So we have with us today Joshua Brown, a financial advisor, a prolific financial blogger, one of our Forbes contributors, and a recent author of a new book, Backstage Wall Street. You really lift the curtain on how the machine on Wall Street really works and what's really happening, how it gets to that point, what's going through a broker's mind when he's doing that. But you're still a financial advisor, so what made you expose your industry this way? Why'd you write the book?
You know, the book kind of was bursting out of me, and it was just a matter of time before I would actually commit it to paper. But you know, it's really like 12 years of seeing so many things done the wrong way or done inappropriately, or so many things that I think not a lot of people, civilians outside of Wall Street, really understands. And I said, if I'm ever going to do this, now is the time to do it before someone else beats me to the punch. And I'm actually amazed that some of the things that I talk about and reveal haven't been written about yet.
Right.
I think that's the real surprise, that I was able to do that first. So
There was something you said to me earlier about, something about 90% of these investors think that their broker has a fiduciary duty to
so
them.
that's the heart of the conflict. There was a study in 2010. They asked affluent investors, not people that have never been in the markets, but people that are actively working with financial professionals. They asked them, does your broker have a fiduciary responsibility to you? 93% said yes, and actually the answer is no.
Where does that come from? Is that the firm leading them to believe that? I mean, is it
Yeah,
a lack
well,
of education?
I think it's a couple of things. The first is, when you hear people that are not working on Wall Street but they're doctors, lawyers, they say my financial guy. They don't understand that there's a difference between
Right.
a planner versus an advisor versus a broker. There are so many titles, and then you get into the higher echelons of this. Think of how many different acronyms there are that you could put after your name.
Right.
CIMA, CF. I mean, there's just a million.
And
So
some-
that's where the confusion comes from. And to some extent, Hala, that actually plays into what the large brokerages want. Because in those gray areas, that's where the margins are. That's where they can say, okay, here's one of our employees. He is a registered investment advisor, Series 65. He is also a Series 7. He's also a Series 6, life and health insurance. So he's got one client. When he does the guy's IRA, he's the advisor, fee
Right.
only.
Switches
But then maybe
tasks.
he sells him an insurance product and he takes an insurance commission. And then maybe also there's a trading account, and that one he charges commissions like a broker. So
Right.
the client has no clue what's going on.
Right.
I mean, really.
So
Does
in a
anyone have
matter
any
of an
idea?
hour meeting, you're dealing with a fiduciary, you're dealing with a hybrid broker, you're dealing with a commission
The butcher,
broker.
the baker,
Yeah,
the candlestick
yeah.
maker. And some of that's by design, some of it's just because we're in this shifting landscape. And I think, again, ultimately it's all headed in one direction, which is holistic, fee-only fiduciary advice, and all the other stuff is just going to disappear.
You made the move from the traditional side, I guess in 2010,
Yeah.
to become a fee-based advisor. What effect did it have, the relationship you had with your clients, the impact on your business? How did it change things?
You know, it's the scariest thing on earth when you have a book of business and that's what you live by. When you're in our industry, it's eat what you kill, meaning there's no salaries. You get
Right.
paid as a function of the clients you have, the assets of theirs you have. When you're moving firms, there's always the risk of losing accounts, losing clients. It can be very traumatic when you have a family, and I think when you get into my book, you get to that point where I've just reached my wit's end.
Right.
I literally
Mhm.
can't get out of bed in the morning because I'm so miserable with the way I'm running my business. I decided to make the move, and the most amazing thing happened. Not only did every single client that I wanted come with me, when I explained to them that I'm now no longer their broker, I'm now their fiduciary advisor, all of a sudden I found out that I really only had their play money, and that they were waiting for me to get serious
Right.
so that they could say, okay, and here's the rest of my portfolio. I like your new business model. I trust that you have my best intentions, and I feel like you've kind of grown up a bit in
Right.
your own mindset. So the most amazing thing happened was that it had a really huge impact on me in terms of broadening my business, and I didn't lose anything in translation. So I was really happy about that.
You said earlier that there's, this world is headed in the direction where this traditional brokerage model will be obsolete.
I'm certainly doing everything I can to make that a reality.
How will that affect the big firms out there who really rely on this steady stream of revenue, the Merrills of the world, the Morgan Smith Barneys? I mean, will they?
They'll
What
adapt.
happens?
They've adapted to worse. For some reason, they're all still in business, and they don't deserve to be. And 5 years after, they tore a hole in the universe. So they'll adapt. I think what'll end up happening, though, is what's happening now, but it'll accelerate. There will be more people hanging their own shingles. There will be more people saying, you know what, I used to work here because I got syndicate, I could give to my clients. Now that doesn't happen anymore. Facebook will be a great example. You'll see 40,000 people throw their hands up in the air. I thought I had a broker who's going to get me Facebook. He can't even do that. What am I working with this firm for? So you'll see brokers and advisors at large firms start to realize they're getting less and less benefit. The marketing isn't working anymore. Everyone knows the emperor has no clothes. The curtain was ripped apart, and we saw firms lose $39 billion of their own capital, and now they're going to manage yours.
Right,
So
right.
it's over. Gen Y doesn't believe it. The millennials aren't going to believe it. And the financial professionals don't believe it either, which is why you're seeing this exodus. And it's going to pick up. And I think what will end up happening is the large firms will realize that they're fighting a losing battle. They will adopt the fiduciary standard. They're spending millions of dollars right now lobbying against Dodd-Frank
Right.
provisions.
Right.
They're doing everything they can. They fight it, but at the end of the day, it's over already. It's just a matter of when they accept that.
You're very active online. They're foreign brokers, your blog, you tweet all the time. What effect has social media had on financial services?
The walled gardens of Wall Street, where the money can come in but the information never goes out, that was a very powerful and formidable front for decades. But the internet has changed every industry. It's changed publishing industry and everything else. So why wouldn't it change Wall Street? So I think what's changing is the information is now coming out. Public data is being sliced and diced and
Right.
displayed online. It's not going to go back the other way.
Right.
Once this kind of thing happens, again, it's just a matter of the rate of acceleration. So I think this concept of social media, it's nothing new. It's just a democratized version of what was already out there. A two-man shop of financial advisors working out of a small office in the middle of the country is not powerful enough to take out a full-page ad in the Wall Street Journal to advertise their services. But what if they put a blog up and they start writing really important, insightful, interesting things, and then all of a sudden people start reading it and telling their friends and telling their friends, and now all of a sudden this small two-man shop is not at a disadvantage to a firm on Wall Street with $1 billion marketing budget. Now all of a sudden there's some parity there in terms of reach and the ability to broadcast a message. So I think that that's what's changing, and that's why people are taking the leap and they're less afraid to go on their own, because they're realizing there are outlets for them to do their own marketing.
There was an interesting moment when you did make the transition. You're walking through Penn Station and you're
Yeah.
ecstatic. You feel like there's a huge weight lifted off your shoulder. What did that feel like? I
You know,
mean,
when you do something for 10 years that you're not happy doing, and you keep doing it thinking that things are going to get better, and, you know, the weight of that, just, if you care, there are people that can do that forever and don't care.
Right,
That's I can't relate to that. But when you care and you are sabotaged at every step by the realities of your business model, and you literally can't do right by people because of the pressures of the firm and the market, the economy, and then when you're able to leave that all behind in one fell swoop and realize I have a future and it's not what I have done in the past, and everything's going to be good now, and now I have control. I've never experienced anything like that before. So it's a really powerful, almost euphoric moment. And, you know, I'm fortunate that whenever things are going tough these days, I can look back at that and say, look at how far I've come versus what I was doing
Right.
and how unhappy I was.